Okay, boys, just going to move on to closing the ledger so that we can determine the profit and loss of a particular reporting period. So once the period has been established, the reporting period has been established, profit obviously can be calculated simply by comparing the revenues and expenses that have occurred for that period. So each revenue and expense item obviously has its own ledger account, and this information is already available in the general ledger. So what we need to do is to calculate the profit. We basically, sorry about that, to calculate the profit, we basically need to transfer all the balances of all these revenue and expense accounts to a special account we call the profit and loss summary account. And this is known as closing the ledger. And I really like this, this description of what the profit and loss summary account does. It's like a funnel that channels all revenues and expenses into the one account with a sole figure. I really like that as a bit of a, I suppose, a graphic or an image that we can get in our minds. So basically, the profit and loss for the current period is produced at the end. So in the process, the revenue and expense accounts will actually be emptied or reset back to zero in readiness for the next period. Now, the reason why we do this is because the revenue and expense figures are only valid for that particular period, and so for the next period, it will need to reset so that you can obviously calculate the figure for the next period. So we do this for two key reasons. We need to transfer the revenue and expenses from the profit and loss summary account in order to calculate the profit for that current reporting period. And then we need to reset the revenue and expense accounts to zero in preparation for the next period. Now this next part is really important. It is only the revenue and expense accounts that are closed. And this is because this is where we come back to the balance sheet being an as-at figure and the income statement being a performance report for a particular period. So revenues and expenses only exist during a particular reporting period. Okay, whereas assets and liabilities will exist into the future. So the balance sheet involves future benefit or future sacrifice and should not be reset to zero. But their balances need to carry forward into the future or the next reporting period. Okay, so if we can knock over review questions 9.2, and then we'll move on to the actual process of closing entries and putting them into the profit and loss summary account. Okay, so now we're going to have a look at the process of actually closing the revenue and expense accounts and putting them to the profit and loss summary account. So as we know, because revenues increase owner's equity, generally revenues will have a credit balance. Okay, so in order to transfer these balances, the revenue accounts need to be debited or reduced to zero. And then there's a corresponding credit. Oops, sorry about that. There's a corresponding credit in the profit and loss summary account. This entry is first recorded in the general journal and then obviously into the general ledger. And this is basically how it looks. So we've got a trial balance here. All right, and the three revenue items, we've got the sales revenue, we've got stock gain, and we've got our discount revenue. So we take those figures, and this is how we deal with it in the general journal. We basically add up all those figures, and we summarize that figure, obviously because of the profit and loss summary, and that goes into the general ledger with the the narrative of closing revenue accounts to profit and loss account. Okay, so yeah, look, I mean, it might seem a little bit strange to debit a revenue account, but basically what we're trying to do is we're trying to bring the revenue account back to zero so that we can restart it the next month or the next reporting period. So this is what it looks like in the general ledger. Basically what we do is in each of the revenue accounts, we basically put a debit item here, of the profit and loss summary, which will bring the item back to zero, obviously discount revenue there. And then notice here that it is a summary, okay, for the total amount. So now that all the revenues have been transferred to the profit and loss summary account, revenue can be calculated, or sorry, profit can be calculated. And also, obviously, as you can see, the account's been reset to zero, so that the next month or the next period, it can continue on. Now, the important thing here is that we realize that it is a summary account, okay? So when we're moving the revenues across, we basically total all the revenues, and our cross-reference is simply revenues and profit and loss summary account. Now, closing expense accounts, pretty much the same principle, except obviously inverted. Basically, because all expense accounts are generally they're generally in debit, because obviously a decrease in owner's equity is a debit. What we need to do is we need to credit all the expense accounts. So here we see that all the expenses, we've got discount expense, rent expense there, have all been closed in the general journal, and we've got a debit figure there that needs to go to the profit and loss summary. Now we notice here that the cross-reference is profit and loss summary, and in the profit and loss summary account, the cross-reference is expenses. Okay, so I suppose the next thing to do after we've done that is basically calculate the profit. So we work out whether the profit and loss summary account is in debit or credit, and then that information must be then transferred into the capital account. So we've calculated here that we've actually made a profit of $5,300. Now that is debited from the profit and loss summary account and credited to the capital account. And this basically is the transfer of net profit from the summary account basically into the capital account or the owner's equity. And this is how that looks here. Okay, so important here that we don't label it profit. Even though it is a profit, we need to label it as capital, because the reason for that is that there is no actual account named profit. It's named capital. So if for example it was a loss, we would have the capital over here, and we would put it would be obviously the exact opposite. Okay, so now that we've completed that, I think we need to do review questions 9.3, and then there'll be some exercises to do on the back of that.